Hello, friends. It is the last week of February 2020. The stock market is cracking badly in the United States, as well as pretty much around the world. And lots of people are panicking. Never a good idea. Because of that, I decided to share with you several essential clips from the private webinar that I taught yesterday. I teach them once a month. People pay to attend, but in these stressful times, I think the message is important enough to share with all my readers and people who follow my thoughts. So take a look. Good evening, everyone. Pleasure to see you here today. Quick review of the international market. Australia opens on a gap, drops down heavy, closes, at least closes for today at -2 HER. The impulse system is red, of course. Canada opens on a gap, drops down heavy, closes at -1.5 HERs. Germany, another gap opening, another red bar. Hong Kong, another gap opening, red bar. But look how it's stabilized actually quite nicely. It's not making any low. It's holding above this year's low. Japan trading at a -3 HER. Just take a look back for a second. 2018, Japan was at -2 HER, and in summer of 2018, it was at -2 HER as well. So once it gets there, there's not too much more going down. It either stabilizes or rallies. But it's red. France opens on a gap, red. Singapore opens on a gap, tries to rally, holding the lows. And again, what I would like you to pay attention to on these charts, through which we're moving fast today, is there are 3 ATR channels. ATR is average true range. Since this is a weekly chart, the distance between the two lines is the distance that this market can cover on a normal week. When the market goes to -3 HER or +3 HER, it shows an unsustainable extreme. And you can see it again here in Singapore, -3 HER in 2018, -3 HER again in 2018. And that's where rallies start from, near -3 HER again. So yes, markets are dropping. Yes, they're red across the board. Taiwan, another market holding nicely above the January low. UK dropping heavily towards -3 HER. So what I began saying, everybody is looking at the falling markets. Everybody, and people are stressed because most people have long positions, myself included. Those positions are doing badly, and there is a growing sense of panic among many people. And meanwhile, we have tools that allow us to see what is normal, what is extreme, and markets naturally recoil from their extremes. Mexico, even Mexico dropped. Mexico was the only market that was going up in recent weeks. Even Mexico dropped, trading at -1 HER, very civilized. South Korea opens on a gap down and is trading actually up from the gap. Brazil opens on a gap down, heavy, is moving towards -3 HER. The arrows show my previous trade in Brazil, closed long time ago. India opens on a gap down, red. And China opens on a gap down and actually is having a rally. Nevertheless, what we see here is all 14 key international markets are red. This is a highly unusual situation. And I would have to, let me see if I can pull up this chart. And I'm looking, when was the last time all weekly groups were read? It was August of 2019. August of 2019 was here. You see this vertical bar? This is where all groups were read. Was really a great buying opportunity. Massive upswing followed. And before that, when all 14 groups were read, it was in October of 2018. And that's here. Again, it was near a major bottom. And before that, all 14 groups were read in March of 2018. Let's see, when was that? That, well, was only 1 week, and it wasn't very useful. The market basically stayed flat and then continued lower. I want to see another sequence of groups. Wow. January of 2016, the beginning of the current bull market. In any case, what the market is coming into now has a very high probability of being in the vicinity of a fairly major bottom. Sometimes the bottom of the complete bear market, sometimes a bottom of an important intermediate correction. So message, don't panic. I call them super groups because they involve so many stocks. US, basic materials, red, opens flat and slices down. Consumer non-cyclical, opens in a gap, slices down below value. Consumer cyclical, also red, slices below value. Financials, very strong market normally, opens in a gap, red. Healthcare, opens in a gap, red. Industrials, opens in a gap, red. Again, near -2 ATR, pretty low. And when I say pretty low, it's in the area which usually calls for market bottoms. Oil, red, and US technology, red, holding in the value zone. US telecoms, red, below value. Utilities, red in the value zone. And real estate, red in the value zone. So all 11 groups are red. What happened last time all 11 groups were red? We're looking at this column M. It was in June of 2019. Well, 11 groups were red. Let's put up a chart of the S&P weekly chart. June of 19. How about this? You see this bar? This is where all where 10 out of 11 groups were red. Great buying opportunity. Before that, it happened in December of 2018. December of 2018 was here. How about this? Another terrific buying opportunity, a little bit early, a week too early. Before that, October of 2014, I think that was not such a great sign, but still, there was a bit of a rally, not a major rally, but a bit of a rally. Before that, 11 groups in February of 2018. That was here, prior to the bull market that went on for the whole year. In other words, the message here is very similar to what you saw, what you heard me say about international markets. This kind of crazy, insane waterfall decline scares people and creates a platform for a new rise. Something I've said before, and I think today would be a good day to repeat it. Keep this in mind. We trade pretty much the same stocks year after year after year. Some new stocks appear. Occasionally, there is a new issue, IPO. Some stocks get delisted or taken over, but I would say well over 90% of stocks have been around for many years. And so it's the same stocks that we trade in bull and bear markets. Strong stocks go from strong hands at the bottom into weak hands close to the tops. And then weak hands get shaken out and strong hands pick up again at the bottom, and a new bull cycle begins. So what we're seeing now is a shakeout that will eventually, difficult word, what's eventually? Is it a few days? No. Is it a few weeks? Quite possible. A couple of months. Could be that long, but I don't think so. But this shakeout creates opportunities. Now, I posted a message on Twitter, which I very seldom do, but couldn't resist. I posted a message on Monday saying a sign of a strong mind is the ability to hold two conflicting thoughts at the same time and to be aware of both. The current example, buy when blood is flowing in the streets, one thought. The other thought, trying to catch a bottom is like trying to catch a falling knife. You invariably grab it in the wrong spot. How do we put these thoughts, two conflicting thoughts together? That's really the theme, the topic, the challenge for tonight's webinar. But what we have seen so far, all 11 supergroups in the US and all 14 key international markets are red, a perfect storm for a panic. And stocks that are being sold are also being bought. So who do you think is buying them? Not idiots, I assure you of that. So, I hope you enjoyed watching these video clips. If you would like to participate in these webinars on a regular basis, see how I analyze the markets, ask me questions, come to elder.com, join. By the way, everybody who joins our webinars also receives on weekends my scans of 500 S&P component stocks. I run them through my scanners for divergences, for extremes, and share the results with you. And if you would like to see what I'm doing pretty much on a daily basis, analyzing the markets, making decisions, occasionally sharing trades, the website to come to, of course, is spiketrade.com. See you there.